What's up, everybody? Happy Friday. It's that time of the week. Kyle and I, we've got the latest and greatest tokenization news for you. What's happening in real world assets and a special guest for the market movements, everyone's favorite attorney from InvestReady, a credit token, Adrian. We're going to get to him in a moment. But Kyle, my friend, how are you this week?
Herwig, I am great. It is mid-July. We are thriving. Crypto is booming right now. RWAs are hot. We've got public markets getting excited about crypto and RWAs. We've got the private markets excited about RWAs. We have everything flying in our direction, including some legal regulatory updates. Man, it is an amazing week to be in the industry.
We've been talking about how banks and institutions are coming on chain. Some of the biggest startups are now hitting multiple billions of dollars in tokenization size. And now the regulation in the United States may just be catching up, starting with the Genius Act, which just passed this week in the House, off to President Trump, who has already vocally endorsed that he plans to sign this. So why don't we get right into that topic, over into the market movements. And Adrian, this week, welcome. How are you?
Doing pretty well, guys. How are you guys doing?
Doing great, doing great. Tell anyone who may not be familiar with you who you are, what you do.
So I am Santa Claus. No, just kidding. I am the founder and CEO of InvestReady. We do accredited investor verifications. I've been doing it now since 2013. And also InvestReady itself is the new service provider for a service called a credit token, which basically puts those verifications on chain. So we do not just the accredited investor verifications, but some proof of humanity stuff, like age verifications in there that we're doing. So it's it's pretty new, but it's we're hoping for it to be pretty huge.
You know the nuances back and forth of raising capital. I know you've been very active with a lot of the SEC public, kind of requests for feedback over the decade that you've been doing this, right? So I'm excited to kind of dive into the topic and definitely get your insights on the latest and greatest here in the U.S. when it comes to regulation. Obviously, I just mentioned the Genius Act has officially passed. Everybody is pretty thrilled, I think. There aren't too many naysayers. I don't, it's not perfect in my opinion, but it is better than nothing. And as Kyle likes to say, you can't let perfect get in the way of good. And in this case, it's probably great. Maybe Kyle, any color you want to add in this before we pass it on to our guest here about his thoughts on all this?
Look, I'm just really, really happy to be here. It's, the Genius Act is a game changer for everything in this industry. And just getting regulation that defines some of these terms, even in and of itself, is useful, I think, from just a general transitory perspective. Obviously, the House and the Senate and all the regulators and SEC and CFTC, all these chairs and positions rotate out a lot, right? And so there are going to be different perspectives on a lot of these things. But at the very least, if we can agree on kind of what are the codified definitions and directions for these things, it does start to provide a little bit more clarity and a little bit of a framework so that it becomes more predictable. I think that alone is pretty huge. So it's good.
And that's why they named the other act the Clarity Act. So it was literally the reason for it. Guys, what a change a few years makes, and what just a different take from the administration, just based off of the seeing what the people actually want during a campaign. It really speaks to our democracy and the ability for us to really adjust as we go and get people that we want on there. And in terms of the Genius Act, I think it's going to be huge and a monumental shift that's really going to force the industry and everyone on chain, just because it opens up the doors for stable coins and clarifies the stable coin portion of it so well. So I'm happy to kind of give a breakdown of like because there were actually 3 bills yesterday that were passed. One, which is the Genius Act, has been passed by both the Senate and the House. So if we go back to like, how does a bill get made? Like that whole thing. We got Senate and House, and that one's going to the president to become law. The Clarity and the Anti-CBDC Act, those were just passed by the House. So they still need to go through the Senate. And then depending on what happens there, if there's any adjustments, it may have to go back to the House and then go to the president. If they just pass it, the same clean bill that they did for the House, then it would just go straight to the president. From my sources, I have seen, it seems that it's likely going to just be a clean bill, and that they're aiming for the end of September for the Clarity and for the Anti-CBDC Act. In terms of when it would be passed, as Congress is going on recess in August now, so they're not going to be here, but they'll be back in the fall, and that's one of the first things they're going to do. In terms of the impact, so obviously, I think that there's going to be some first order impacts it just gets the clarity that's needed for stablecoins and knowing that you're on the right footing. They basically copied what Circle's already doing. So Circle's, I think that's one of the reasons why Circle's IPO went so crazy, that they were kind of the template that was used for this act. What my take though is that this act may be the signal of the high point for stablecoins, because there's another huge portion of the market that has not reared its head, but now is being forced to, and those are bank deposit tokens. And the difference there is that a stablecoin, what this law does, it kind of reins in stablecoins in that it has to be a one-to-one. You have to have the cash behind the stablecoin. You can't give yield, and there's other limitations to it in order to be a stablecoin. Deposit tokens, on the other hand, especially if the banks get their way, which they've been known sometimes to somehow for some reason. And so if they get their way, these deposit tokens, not only will they be able to provide yield to their bank customers that are retail, but they'll also be able to print out a bunch of tokens just like they do. It's fractional reserve banking, guys. You can have $1 and you can print out 10 tokens. So think about the disparity we're talking about here, where Circle has to have a 1-to-1, but Chase can have 1 10-to-1. And who do you think is going to now
9-to-1? I think, right? I believe it's 9-to-1.
Yeah, 9-to-1. You're right. You're at 9-to-1. Sorry, 9-to-1. But even regardless, now you have Chase, not just, I want to kind of get into crypto. No, you have an existential threat by the stable coins to the banking sector. If everyone starts paying with stable coins, Zelle is no longer needed. Banks themselves are less relevant. And Gen Z may just have a stablecoin account and not even have a bank account for a lot of things later on. So they're going to now have a huge incentive to push their own customers on chain using their rails as opposed to the stablecoin. So I think it's going to usher in the next era of crypto, but not in the way that people think that it will, because it's an incentivizing structure to make the banks get on chain.
Yeah, it's well summarized, well said, Adrian. In fact, we have seen no shortage of very quiet banks like Bank of America that are now being very vocal about participating in multiple stable coin or deposit token initiatives. We also saw recently Citi and J.P.Morgan confirm this on their earnings calls, that they're leaning into stable coins and tokenized deposits, right? Because you just summarized a well differentiator, a big opportunity there for the banks and just those that are sort of the fintechs, if you will, that are moving into this business, trying to take their lunch, trying to take the monopoly that is, typically taken by the banking industry. So it's a very interesting time, but of course it's happening globally as well. So this isn't just, making modern payments here in the United States. This is truly also access into DeFi and other applications. So it's going to be interesting now that we finally have some clarity that as more stable coins, which if you're tired of hearing about stable coins, good luck, because you're about to hear way more about it. Now the real innovation, in my opinion, is actually going to begin. You're going to see way more money, way more big banks and fintechs move into this and have confidence in innovating and providing more competitive products in this space that, ultimately benefit us, the user, down the road. So I'm very excited about this. This is huge. Let's see what happens, I guess, with the clarity and anti-CBDC. We probably could spend another 20 minutes talking about those.
I think with clarity, especially, it does provide a really nice process for people to at least understand how to move it on a legal standpoint from a security to a commodity. Funny enough, I became a little bit internet famous about 2.5 years ago during the XRP trial for the SEC. It was November of 2022, after the whole FTX debacle happened. I really wanted to at least have a say in how things would actually be fixed. And so there had been 13 anti-SEC amicus briefs on behalf of XRP, and I was the first one that wrote a pro-SEC amicus brief, and then kind of blew up on Reddit. Had a bunch of people on Twitter go after me from the XRP army. But basically what I said in the piece was, yes, it's obviously a security when they sold it. At least to me as a lawyer, I was like, duh, yeah, they're selling it. There's, the maximization of profit was a big issue, posting all this stuff on XRP's Twitter all the time. But what I suggested in there was for them to be grandfathered in, and for a process to be put in place to transition tokens from a security to a commodity. The Clarity Act basically uses that same method within it to provide that wanted clarity for the market. So I guess I was a little early and ridiculed for a little while by the XRP guys, but for some reason now it passed, and XRP is almost at an all-time high. So everybody's happy. So 2.5 years later, nobody's complaining.
Yeah, well, I think that clarity is much needed to whatever degree here, to know which regulators and what framework we can go with. We just saw the Cayman Islands, which is a pretty popular jurisdiction for a lot of funds to be set up. They're now moving into passing a law to clarify further equity tokens. This is something that Kyle and I have been talking about since day one. As simple as it sounds, passing a law that says equity tokens need to follow traditional securities laws that have been passed needs to happen to bring that confidence and clarity to the market. So I'm excited about that. But, we're going to see later today at 2:30 Eastern, a lot of celebration, I think. And we move on and forward into RWA summer, which I'm excited about. The other big trend that everyone's been talking about, which is on-chain stocks, right? It's cool to see some of the many other applications like tokenized treasuries or money. But this is something that really starts to tie into the mainstream of people being able to say, hey, there's a better way to invest in stocks, and that's tokenized. And it's predominantly starting in Europe, as we've seen a lot of providers tap xStocks, which is by backed finance, which has already been doing a lot of these tokenizations. But now you got Kraken, you got Bybit, you got Gemini that just rolled this out to 14 other products. This is a popular trend that has been, for anyone who somehow missed it, put out there vocally to Wall Street and regulators by Robinhood recently, saying, hey, they're going to do this too. And in the past, we know Binance and FTX and others did this. It was a trend. They got millions of dollars in daily trading volume, some of these on-chain stocks, but it never took off, right? But now that Robinhood is going to do it, everybody is paying attention. Even some of the regulatory bodies and some of the trade associations have come out and pushed back about concerns about all this. And one of the coolest features about on-chain stocks, like why do we want on-chain stocks, is being able to use decentralized lending protocols and be able to borrow against those products, not stuck within one brokerage account where you're stuck with whatever service that broker provides. No, you own your token now. You own your ownership in Tesla, and you can move it around, in this case, to a platform like Kamino that will let you use xStocks as collateral, which is a Solana-based lending protocol for anyone who doesn't know this. So I get super excited about this. For anyone who follows the show well enough, they know I'm huge on lending. I'm huge on vaults. I believe this is what's going to bring an incredible amount of money into the space. Let's see if my friends here are as excited about it as I am. What do you guys think?
Yeah, I think that collateralization very much is the answer to the liquidity problem, especially in the short term, because, you know, a liquidity discount on the spot market means somebody's only willing to pay you 20 cents for your share, which a lot of people aren't willing to do, right? I bought it for $1 worth of value. I don't want to sell it for 20 cents worth of value. But if I need 20 cents worth of dollars for something else in my life, or I see an opportunity, being able to collateralize my stock where I don't have to sell it, but I can still get that 20 cents, which maybe is what somebody's willing to pay me for the share on a collateral market, because that's what they only see it being worth from a par value perspective. That might allow me to double dip or get levered or things like that and get some liquidity on my shares. And I think people will be more likely to offer a 20% collateralization than a 20% buy. And on the same side, I think somebody's more likely to accept a 20% LTV loan as opposed to a 20 cents on the dollar sell. And so I think that this is a good way to start to bridge that market. We've seen how successful Aave and other platforms have been in the DeFi ecosystem. A lot of that infrastructure already exists. It's pretty well thought out. I'm sure that there's a lot of market mechanics around less liquid markets, and especially at least in the securities game, you can value some of these things. And so maybe for, early stage startup equity, this is still, going to be a work in progress, but I know there's a lot of private credit, there's a lot of real estate, there's a lot of cash flowing securities vehicles that have a pretty clear value proposition, have a pretty clear payout. And I think they can be definitely used as collateral and should be really, really interesting here. So I love this model. I think it makes a ton of sense. And especially if you're using xStocks, which seems to be pretty blue chip public market securities, there's going to be a lot of liquidity on the public markets that kind of backstops that vehicle. So I think this is fantastic. I'm super bullish.
Yeah, the inexorable march towards tokenization continues. This is just another thing that goes towards that. It's a bridge to old finance to new, and really is giving exposure and showing how there is value to be had by using things on chain, by allowing for, like what you're saying, Herwig. I think the freedom that you have by having ownership again. Like I think like as a society, we've gotten less and less used to owning things and kind of just like streaming things and we don't own music anymore. We don't have CDs. We don't have everything's a license. Tokenization and decentralization kind of puts that power back to the individual to be able to decide what it is that they want to do with their own assets. And tokenization is just that next step that allows for that. So, I think it's just, it adds another feature, another reason why people should at least need to be considering some sort of Web3 or blockchain strategy moving forward, because it's like we're like in 1994, guys, when everybody was getting the AOL CDs in their inbox, in their mail, and like, oh my gosh, we're getting online, and like people were like, what's a website, and like, how do I internet, that type of stuff. We're there, and in the next few years, it's going to be absolutely insane how much everything's going to change. In terms of even in like my, I'm not necessarily the most hardcore trader or have like the craziest setups and stuff, but even the idea that like I can take $20,000 worth of NVIDIA stock and actually turn it into a dividend paying stock because of the fact that I can collateralize it, even in like a money market fund, for example. Let's say get 60% LTV on it. If you're putting that in a vehicle that gets you 4 or 5% interest, you're going to get 2% interest or so on your stock, right? And you have to pay that back over a period of time, and maybe the interest rates don't totally line up, but but there are some cool, I think, things you can work through there to generate a little bit of extra yield, or maybe buying some additional shares to kind of get some leverage on it that just don't exist today in Robinhood. No, 100%. It gives you tools that were really only available to the top Wall Street traders, a decade ago, and puts it in a way that it takes milliseconds instead of minutes or hours like it used to. So it really democratizes a lot of this stuff.
not just removing the middlemen, not just creating the access, right, to maybe people who didn't have that before, but also just flipping the whole game on its head, right? Now lenders and the way they underwrite and the way they have to be competitive with their offerings, this is no longer just we've got a product we can lend. Like there's going to be very competitive options out there. And it's going to be a very fluid market eventually. And I'm very excited about that. And my cheat code, like the reason that why I'm so excited about this, right, is looping. And people can already do this on Kamino. This isn't the first RWA that Kamino is already supporting. They provide their same support for a cred, which is by Apollo, their private credit fund, and people can loop that, right, and say, hey, I'm gonna go ahead and borrow against that and take what I just borrowed, and then go ahead and buy more cred, and then go ahead and borrow against that, and just do it as much as you can. And loop it, right? And that's going to, again, lead to so much capital coming into the space. It's we saw already a picture into this during the DeFi farming, yield farming days a couple of years ago during DeFi summer. So this is now just going to happen for all capital markets. And it's going to lead to a huge demand for tokenization, not just people borrowing, but a huge demand to tokenize assets themselves. So good stuff on Kamino. And another shout out to Spiko, who has now raised $22 million in a Series A to continue scaling up. They've already got $333 million in AUM for their money market funds. They're targeting $1 billion by the end of the year. Index Ventures and many other prominent investors are participating. They're pretty much solving the gap of bringing yield from money market funds to European firms and customers, which makes a lot of sense, right, to be able to tap into that. And so another sign, I think, we have just been week after week, 135 million for Canton, just big raises week after week. I love to see it. The time is alive and well for the RWA industry here. Any thoughts on this Spiko raise, guys?
Adrian, what are your thoughts here?
Like you said, it's another peg towards tokenization. I think Europe in general has been a bit ahead in terms of regulating the space, which Europe loves to regulate. So I'm not surprised by that. But in general, it's a little bit of a race now between us and the Europeans a little bit to see who gets more stability faster. Micah over there has been at least somewhat popular and has gotten some good feedback in terms of that space. But I think this is there's so much M&A, there's so many fundraising, there's so much happening over the last few months and continue to do so for the next foreseeable future, especially after all of these regulatory changes have passed. So it's great.
Yeah, I think this is just a great example of kind of the new generation of hedge fund. And these DeFi platforms are essentially building quantitative strategies through smart contracts to take advantage of, interest rate arbitrage, essentially, between different markets, different jurisdictions, and now between traditional capital markets and digital capital markets. And so some of these companies are obviously not structured like hedge funds. I'm not suggesting that this company is, but I think it's the same kind of model. And a lot of these firms, either directly or indirectly, will power and empower a lot of large fund managers to take advantage of the spreads and differences between the different rates, which, in a lot of ways can be arbitrage-based models, which is free money. So it's interesting.
Everybody loves free money.
So and this is kind of the market where it's like now the markets are liquid enough that real money can come in, but they're not necessarily over tapped enough that there probably are still some really interesting spreads. These guys specifically kind of outlined this idea that there is a gap between, they say cash yield gap between Europe and the US, which in my mind pretty much just screams arbitrage, right? There's a difference in yield that you're getting for that money. And so really cool to see.
Well, I completely agree with, of course, all of that. And we're going to continue to have a front row seat to it here as the markets keep on moving. No pun intended, bad joke. But that's what's happening in the RWA space. Stablecoin, clarity and genius coming. We have a lot of exciting things for the RWA space with on-chain stocks, with lending, with institutions coming in. It couldn't be a better time, I think, to get into the space. We've got even more news to get into, don't we, Kyle? So I guess we're going to have to get on with the show. Thank you, Adrian, for joining us.
Anytime. Check out accredittoken.com when you get a chance to get a proof of humanity token.
Nice one.
All right. See you, Adrian.
We're alive and well in RWA summer. Things are hot. The crypto markets are on fire, and it couldn't be a better time for Wally and our initiative with the RWA Foundation to connect all people to RWAs, grow the industry by working together with the leading firms in the industry and launching Wally DAO, our community initiative, not only powered by RWAs to support the industry, but also a way to give a voice to us, the crypto natives that are participating in using RWAs and even giving benefits like airdrops, perks, and more. You can learn all about it at wallydao.xyz. That's WALLYDAO.xyz. We have our white paper that you can really dive into. And now is the best time because soon we are going to be announcing just how everyone can participate in earning Wally for the first time ever. We are not VC backed. This is created by the industry, for the community. And I'm excited. We've come up with a very clever way to not only support RWAs and Wally as an end goal, but also take crypto yield and eventually even gamify it so that we'll see who is the hottest chain for RWAs, all while earning Wally at the same time. I'm super excited to reveal more very, very soon. We've got some amazing partners, but you're just going to have to stick around. Make sure you follow us on X at RWA Foundation _. And we've also got our Telegram link there in the bio for you to join our herd, as we like to call it, of over hundreds of enthusiasts getting ready about this future trend. So stick around, join us, and let's get back to the show. Kyle, it's yet another week. It's no slow summer anymore. I've got a ton of updates for you. Are you ready?
Oh, I can't wait. Let's dive in.
Well, I got some new tokens to start us off with. We did see a synthetic dollar protocol, Falcon Finance, their USDF token, which uses Superstate's USTB as collateral, by the way, is now live. This is a trend I fully expect to see many other stable coins take advantage of, whether with Superstate's a similar money market style product or others. We also saw in Uzbekistan, where we announced a little while ago that they plan to launch tokens backed by their bonds and integrated with their national payment system, HUMO. It's kind of a big deal, is officially nearing its launch. So that's pretty exciting. Gemini has expanded their xStocks now to over 14 stocks over in Europe for people to participate in the on-chain stocks craze. KN Group is planning $100 million in consumer finance assets on-chain, of course, starting with a $20 million tranche using AlloyX as their partner for this. And Kyle, we talked a little bit a while ago about how Prypco sold an offering in under 5 minutes over in Dubai, one of the very first villas to be tokenized in partnership with the Dubai Land Department. Must help sell it out in under 5 minutes. And of course, they're going to ride that momentum. They've announced 2 more new offerings. Haven't seen how fast they've sold out, but we'll definitely catch you up on that next week. A few more updates on tokens, Kyle. Aberdeen and Lloyds are using tokenized money market funds and UK gilt units, essentially the equivalent to treasuries over in the UK, as collateral on Hedera for trading via Archax. This whole thing is, of course, powered by Archax, one of the leaders over in the UK. Also worth mentioning, MirrorRSV now accepts OpenEden's CUSDO as collateral. So you're going to, again, start to see more and more applications support different RWA use cases, especially for collateral. And last but not least, Particula has released yet another brilliant rating report, this time assigning an A rating to NEXBRIDGE's USTBL token. Of course, we're big fans over here at Particula, and all the great work that they do. Kyle, any comments or thoughts about this red hot RWA market?
Yeah, the synthetic dollar thing is interesting from Falcon Finance. I guess this is kind of Superstate. We've now seen Agora trying to do something similar by Van Eck. This idea of kind of having an open sourced collateral platform that then you let other companies build a stablecoin or a yield-bearing stablecoin on top of. And so I think that's really what we're seeing here. So these platforms kind of just act as a distribution channel for Superstate, so that Superstate can grow their AUM of their treasury product through some of these multi-jurisdictional companies. You're definitely going to see this more and more frequently, I think, especially now that the Genius Act will play moving forward. So I do want to just kind of clarify what that means from a collateral perspective, as opposed to we do have, this abrd and Lloyds conversation that allows money market funds and UK gilts to be used as collateral on Hedera's FX trading platform. And that's a different type of collateralization where if you're doing futures trading, if you're doing Forex trading, you need to post capital as kind of a obligation or debt obligation for the margin that you're taking on the platform. And so the idea being here that it's better to use a yield bearing product to post as collateral because you're not really able to touch that money. So if you put in a yield bearing product, at least you're earning money on the money that you're having sit there in this pool. So just two different types of collateral. I thought that was an important clarification between the two different types of use cases.
Absolutely. I mean, there's posting margin, there's borrowing for your own uses. There are so many different great use cases of collateral. And that's why you see so many different integrations now happening between all the RWAs and platforms and support for that, which is great to see. As you said, I think it's a very great strategy to grow AUM. This stablecoin, industry continues to be very successful. You basically grow with it as people adopt that stable coin and use that application for, say, collateral or other reserve benefits and other things like that. We also saw some institutional activity, Kyle. Citi and J.P.Morgan, they are officially going to be getting into the tokenized deposit game, as we talked about a little bit earlier. They're bullish on stable coins. This is nothing new now that the Genius Act has passed, and we're going to see a plethora of more announcements in the next couple of weeks. Northern Trust and Swift, continuing Northern Trust's focus on carbon credits to focus on Australia's Project Acacia, if I'm saying that right. Of course, leveraging in this case settlement against carbon credits, which is a pretty interesting concept. They have their Zenith Matrix platform by Northern Trust, I believe, that tokenizes carbon credits. Canton Network continues to add players, B2C2, Cumberland, DRW, FalconX, GSR, joining already QCP and Flowdesk for their on-chain collateral management solution. So again, a huge use case. We know that Canton is very focused on institutional and enterprise players, a bullish sign for people using this platform. Link this week also launched, which we know is powered by actually a few of these players involved, but also by Archax Fund and T0 overlaying that. So you're going to see a lot of these different platforms start to come to market. It's very exciting from the institutional side. And we also saw a lot of announcements. Chainlink and the Blockchain Association launched Tokenize in America, sort of as a state-by-state map that you can check out to support the adoption of assets across the country. Midas expands assets to Etherlink and Tezos as an integration. Ondo Global Markets announced integration with BNB Chain for their tokenized equities, which are not yet live, but imminent, as we know that they plan it for this summer. It's all a lot of action around on-chain stocks. I wouldn't be surprised if it's within the next week or two, or at least early next month. And, I guess Binance starting to really make a play on the RWA space. They've already been powering a few. I believe they helped Bricken early on and many others. Speaking of Bricken, they have now launched their own wallet. So they've gone the full distance, as we heard earlier on a Spaces with Bricken just yesterday. That's our weekly RWA watering hole. Our X Spaces at 10 a.m. Eastern, if you want to check that out. But we got into that whole Bricken wallet and Bricken's relentless focus now on essentially the user experience, not just tokenizing real estate and all kinds of equities that they support now, but actually focusing on the full onboarding of investors and the user experience, which is why they felt their own wallet was necessary. Ripple is moving into the real estate game with a Control Alt partnership. Not surprising, as I keep saying, Ripple is going to be a full-on RWA company very shortly. Theo is also a new player in this space, so welcome, Theo. They've launched with Ultra as one of their first clients, and also another player, Pineapple, entering the IP tokenization space.
Pineapple.
Domains, intellectual property. That's right. Patents and things like that. DeFi Dev Corp. A couple more here, and Switchboard have signed an LOI for RWA Oracle services for Solana, and Pop Social and Asset Mint have partnered up to tokenize RWAs on SocialFi, and finally BioSig Technologies, which is a publicly Nasdaq listed company, engaged CXG to get a broker dealer for RWA tokenization, which we just saw Ondo acquire Oasis Pro to get their licensing. So I expect a lot more broker dealer registrations or acquisitions as well in the rest of this year. Really, Kyle, thoughts on all of this amazing news?
Wow, a lot of updates there. I think it's funny that J.P.Morgan's really leaning into stablecoins and tokenized deposits, despite the fact that leadership has kind of consistently been pretty critical around a lot of these technologies. It's I guess it's a little bit of gamesmanship, but it's still just it's comical that it's such a kind of it's growing in importance within the company, and presumably because of how this technology scales, it could very quickly be a big part of their actual business from a measuring perspective, using stable coins or using their deposit networks and collateralization networks and things like that. So that just kind of cracks me up a little bit. Scrolling down the list, Herwig. Tokenizing carbon credits, I think, is something that we've seen a lot of from an idea perspective. We've yet to see it totally take off. I think that I've learned quite a bit around the differences in types of carbon credits, and that may be what makes it a bit difficult and maybe presents the opportunity, because there is not a great way to track from a transparency perspective what's going on and then value the differences in those things over time. Well, moving into the partnership section, though.
Clearly, just on that carbon credit note, Kyle, clearly focusing on utility, right, in the use case, partnering up with Swift now to be able to enable that kind of settlement. So I think if anybody could do it, maybe it's someone like Northern Trust to really what I would say institutionalize that asset class, because it's still got a long ways to go. But go ahead. Sorry.
Yeah, no, it's great thought. And going into the announcements and partnership section, great to see progress happening across the board. Interesting to see all these different blockchains fighting for tokenization assets on their chain. I think it's a good thing, but it's just, you and I have kind of scratched our head around how the RWA industry was kind of slept on for so long by a lot of these chains. At least it's nice to see that they're better late than never. And some new companies in here, as well as some NASDAQ publicly listed companies. So all that stuff is really exciting. Plenty of great updates. This is a heck of a week, Herwig.
Tons of updates, announcements, partnerships, new players, fundraisers, institutional activity, regulatory updates. It is a lot to cover, and we've got it all for you here. But Kyle, I got a question for you.
Yeah.
Who's your company of the week?
Well, Herwig, before I can answer who my company of the week is, I must first answer what is the company of the week for any of our new listeners, because the show keeps growing and adding new listeners and viewers, which is so exciting. Shout out to everybody who's listening for the first time. The companies of the week segment is maybe the most influential, monumental, game-changing, fundamentally industry-shifting and defining segment in the entire industry. And of course, by that, I mean, it is a segment where Herwig and I picked two companies that we thought made a really big impact in the market this week. Some have compared it to a Grammy Award winning nomination. Some have even said they'd prefer to win the illustrious Company of the Year award, which of course is where we go through at the end of the year and pick one of the winners throughout the week. Hundreds of companies that get nominated to win our Companies of the Year award. Some people have actually said they'd rather win Company of the Year over the Nobel Prize in economics. Some are saying this in the market. It is the Forbes 30 under 30, the Midas list. However you want to look at it, Company of the Year, the most illustrious award and group of individuals in the entire tokenization industry, picked by an exclusive committee of non-biased, bipartisan voters, which of course in this case is solely Herwig and myself. So for that, of course, Herwig, my winner this week for episode 293, I wanted to give a shout out to BioSig Technologies. I've had a thing the last couple of weeks for NASDAQ listed companies getting involved in the RWA space. The reason being is, of course, I get it. They're a new player in the space. I think that some people have a little bit of an interesting view on publicly listed companies that are really pivoting hard into the blockchain tokenization space. But as I've dived into this industry, I've realized how much easier it is to raise significant amounts of capital through the public markets. And one of the biggest problems in the RWA space has been it has been underfunded and relatively illiquid. And so using public market vehicles to attract opportunities and to drive traction into the RWA space, which does have, I think, really strong deal flow and potentially industry opportunities for the first movers in the space from an investment perspective, I think there's a huge play here. They are looking to acquire a broker-dealer in the RWA space, and they're going to be offering gold-backed tokenized offerings, presumably that have some sort of yield associated with the space. I've been playing a lot in recently, and I want to congratulate BioSig Technologies for bringing RWA into the public markets conversation.
I think that's great, and I think taking the right approach to be able to enter the space. So I think that's commendable. I think it's a great choice. Congratulations, BioSig, for winning Company of the Week. But that's not the only winner, as we each get a choice. Right. As much as I love your choice, I got to give the shout out. Everyone who knows me can probably already guess who I'm going to choose for this week. But I'm just so bullish on the application of lending and borrowing for RWAs, for basically even doing it in a decentralized lending matter. That the way that Kamino is able to present that in a compliant, regulated way, that now you can take more than one RWA, right? We saw them support a cred from Apollo before, and now they are supporting xStocks on Kamino's lending protocol. You can take real stocks on chain and go to Kamino. I think that's absolutely incredible. I think this is the future of RWA. This is going to lead to a huge injection of capital. And I think Kamino is going to be on the front lines of that. I also know that other lending protocols will also be and are eyeing up the RWA space. And Kamino obviously being, I believe, the leading protocol on Solana, which is red hot for RWAs as well right now. All good things and signs for what's to come for Kamino. So keep up what you're doing, Kamino Finance. You're my Company of the Week.
I think that's a great choice, Herwig. I think their looping thing makes a ton of sense. It's exciting to juice the yield. And being on chain, we can start to really track where these collateralizations are happening to properly evaluate the risk. So for those reasons, it makes a ton of sense. I think it's a great winner and excited to see what they do next.
You got to love that transparency, right? But that's our show. Of course, we're going to pick some new winners next week as we give you the latest and greatest. But now you get to go and enjoy the rest of your day and your weekend. And of course, we've got the latest and greatest for you on Monday and Wednesdays. Just subscribe to our newsletter, What's Dripping by STM. Just go to newsletter.stm.co. And we've got our spaces on Mondays and Thursdays, Mondays at 11 Eastern and Thursdays at 10 Eastern. Come join the fun on X, where we talk and feature different conversations and projects in the RWA space. And of course, join the herd. Come check us out at the RWA Foundation. And last but not least, Kyle, what's the latest and greatest from Global Settlement? Any closing thoughts?
Well, things are going really well. The tokenization studio is live. We've been speaking with a ton of different issuers and people in the commodity sector. So definitely hit me up if you want to do anything in gold or oil or any type of commodities tokenization or stablecoin work. Having a fun time, globalsettlement.com. And I'll be in Lisbon next week. So anybody listening that's in Lisbon, Portugal, hit a brother up.
Yeah, enjoy safe travels, Kyle. And with that, everybody have a great weekend. And of course, happy tokenizing.